Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Andrew Axelrod. He is a global macro commentator and he's featured on Zero Hedge and Bitcoin Magazine as well. Welcome back, Andrew.
Hi, Ivan. It's good to be back. Thanks for having me.
Yeah, it's a huge pleasure having you back. And the world is going pretty crazy right now, Andrew. More war breaking out in the Middle East. And I wanted to get you on to ask you, how does this affect the whole market, like the world market and precious metals, silver and gold? What is your views on things right now?
Yeah, the headlines have been crazy, and it feels like it's one thing after the next, especially when you get into politics, when you get into geopolitics, when you get into these wars that are happening. It gets kind of crazy. But I
Hmm.
find that these headlines, what's happening on social media, it almost kind of buries the lead, which is to me, it's the big story of these past few weeks and months, which has gone unreported to a large extent, which is the debt spiral.
Right.
And so, yeah, if you've been in markets long enough, you kind of know that narratives, they're always, or the consensus narrative is always wrong. And so if you go back to 2008, for example, the narrative at the time was that real estate only ever goes up. Like I remember people used to quote Mark Twain that you can't go wrong if you buy real estate
Right.
because they're not making more of it. And I remember I was never big into politics, but I do remember George W. Bush at the time. It might have been when he was running against Al Gore, or maybe it's Kerry. I'm not sure, but he got criticized pretty heavily for being the only guy to lose money in real estate, which was like a big issue. Then you fast forward to the tech stock era. The narrative was these stocks are overvalued. They're not even revenue. They're not even profit generate. They're loss generating, as a matter of fact.
Right.
And so these valuations don't make any sense. The punchline, it was 10 years of pretty much the biggest bull run that anyone's ever seen. What people didn't realize is that, and I'm a big believer in this, that if you invert the price to earnings ratio, what you get is actually your yield, which kind of lets you compare it to treasuries
Right.
or other kind of debt. And what happens if it's a ZERP environment, a zero interest rate environment? Well, the price goes to infinity pretty much, which is what happened in the tech sector.
Hmm.
And then you look at what happened during COVID. It was supposed to be, and more recently during the banking collapse, it was supposed to be that treasuries are the long established flight into safety. This is the safe haven that people always choose. And of course, bonds collapsed 20% together with equities. First time that's happened in something like 50 plus years,
Yeah.
60 years. And so, yeah, the narrative is always wrong. And the narrative right now is that the Fed has somehow pulled a rabbit out of the magician's hat, and that we're in for a soft landing. But as Milton Friedman liked to say, like if you want to see what's really going on in terms of financial stability, in terms of inflation, you don't look at the distractions. You only look at government spending. And so I just wanted
Yeah.
to go through these figures for a second because they're really stark. So
It's
the debt, yeah, please.
yeah, no, go through the figures first because I just wanted to sorry for cutting you off. It's so important what you just said. People get lost in the headlines and this and that, but if you just look at government spending, that's what's important. So yeah, if you can give us those figures, it would be much appreciated, Andrew.
Yeah, no, that's exactly right, and it kind of makes you wonder. It almost seems on purpose, but the one lens that current events never get analyzed through is through a fiscal and monetary lens.
Right.
And so, yeah, so if you go through these figures, historically, and I'm going to talk about the U.S. here because, well, two reasons. I wouldn't. It's not a. I'm not. This is not. You get criticized for for being anti-American. It's not the case at all. I talk
Right.
about the U.S. because I care about the U.S. I wouldn't talk about it if I didn't care about it. And
Hmm.
second of all, if you're talking about the financial system, you're talking about U.S. dollars. So what other system are you going to be talking about? But anyway, the debt ceiling was raised 78 times since 1960, which is you kind of go, okay, like if you had to raise your roof, every few months, you'd probably fire the architect. So it's not really a debt ceiling, it's a misnomer, it's a bit of a joke. But at the
Right.
very least, what you could say is that every time this happened, it would make headlines, and at least it was in the public consciousness where people would remember, oh shoot, maybe there's something wrong here, debt ceiling's going up again, maybe something's amiss. But anyway, people don't realize there is no more debt ceiling. The debt ceiling hasn't been raised. It's been suspended until
Mm,
2025. So at the moment, it's just absolutely it's carte blanche, right? They can spend as much as they want without having to go through this, with it, not even without even having to go through the theatrics of it.
right.
So if you look at the national debt, so within the last 12 months, 2 trillion were added, and if you, it seems like yesterday, but back in October of last year, it was 31 trillion, and in September we spent past 33 trillion. And if you look at that historically, and to put it in a bit of context, since the birth of the nation in 1776, it took 205 years to get to $1 trillion of national debt. And now in some circumstances, in some situations, it takes 5 weeks to add $1 trillion, which is exactly what happened between June 2nd and July 6th. And you keep seeing sort of these spurts of massive debt accumulation in
Mhm.
sometimes in a single day. So for example, on October 4th, it the national debt grew by $275 billion in just a single day. I think
Yeah.
during the last 3 weeks, for example, it was 550 billion. I think you
Wow.
posted about that, but it's really
Yeah, I
striking.
seen one today as of we're recording this as October is it the 10th or the 11th today? What day is it today?
The 11th, but
Yeah,
yeah, just the last
October
3 weeks.
11th. It's crazy. It is absolutely crazy.
It's insane. If you break that down on an hour by hour at the current rate, the debt's increasing by 1.4 billion every single hour. And I mean, okay, fair. Like a billion isn't what it used to
Yeah,
be,
but it's
but it's still a
crazy.
lot of
Yeah,
money.
no, that's
And it
crazy.
Yeah, and if you put in context, so in the US, for example, less than 300 tech unicorns were founded in 2022. And if
Hmm.
anybody that's worked in the VC space, like they know how impossibly difficult it is to get to to a valuation of $1 billion, like
For
to get a
sure.
company from zero to that.
Yeah.
And so, yeah, basically, we're spending every single hour, we're spending one of these. I mean, they're called a unicorn for a reason, right? Because they're that rare. And
Right.
so, yeah, within like 300, yeah, every single hour, one of these are getting spent.
Insane. So what does this all lead to, Andrew? Like I like these numbers are absolutely fascinating, but at the same time, it does seem scary how it took, you said it was about 200 and some years for us to print a trillion, and now it's like we're printing that in record time. Are we heading like with all the wars that's happening in the world, are we heading for something that's like the Romans where the great Roman Empire collapsed and they had no more money because they just minted to hyperinflation? Is that the same path for the US? And what is it just, are we just gonna, when does it pop off?
Yeah, that's the $1 trillion question. So what's a bit annoying about this is that when you look at the commentators and when you look at the analysis of what's going on, the focus. So I mean, first off, it rarely gets discussed through the lens that we just talked about, and
Yeah.
if it does, people get lost in the sauce of what are the exact mechanics that are sort of enabling the spending. So for example, Kevin McCarthy just got ousted the other day,
Yeah.
and blame was laid at his feet. And one of the reasons was CR, which is it's a continuous resolution because in theory, uh, the Senate is supposed to pass 12 spending bills or appropriation bills every single year, and they're not doing that anymore. They have these continuous resolutions where they're just packaging these these massive spending bills into other omnibus bills, and they just get swept through. And that's one of the reasons that they're saying that that the national debt keeps gapping up. But
Hmm.
that's just the mechanic of it, right? That's not the root cause. The root cause is system failure. And I
Wow.
think that the journal Science, it's called Science, it's a prestigious journal, but they did a really interesting study a few years ago where they looked at healthcare costs, and it turns out that 50% of total healthcare spending accrues during the last year of a terminal patient's life. And it's about 80% during the last couple of years. And it makes sense because
Yeah.
the more fragile, the more sick the patient or the system becomes, it starts to consume more and more resources just to prop it up, right? And I
Wow.
think in some sense that's kind of what we're seeing here. So the CBO is and this is like the government's own, this is the Congressional Budget Office, their own figures. They're saying that the just servicing the debt alone, the interest costs, it's going to be 3 times defense spending within 20 years, and
Jeez.
it's already at par. So few months ago, for the first time in something like 30 years, the servicing the cost of servicing the debt, the interest payments overtook total military spending. And so this is, this is clearly unsustainable. And what you're seeing is, once the more people realize that the system's, unsustainable, what starts to happen is looting, because people are just, they're trying to grab, whatever they can get their hands on. So if you look at, for example, the Bernie Madoff scam, during the last few months, he knew it was over, right? And
Right.
so the last few months that led up to his arrest, when he knew it was all done, that's when he was withdrawing the most money. So he withdrew something like $1.2 billion in the last few months, and he was buying boats, and he was buying villas,
Yeah,
and he was giving
assets.
bonuses. Yeah, he was giving bonuses to his employees, trying to take care of his kids. And so I think that's kind of a microcosm of what we're seeing play out. And this is happening both on the institutional level, on the corporate level, but also on the national level, where you have countries like Saudi Arabia, and you have countries like Japan, where they're, and more recently Israel, they're selling off their treasuries, and they're not doing this maliciously. In many cases, there's different reasons for it. In some cases, they're trying to prop up their own currencies
Right.
where they're selling treasuries, getting dollars for them, selling those dollars against their own domestic currency to prop it up. Or in other cases, it's just a question of survival, where in Saudi Arabia's case, for example, if you think about it on the national level, it's like treasuries are like their savings account. So if a crisis comes up, they're going to tap into, you can either go into debt, you can print it, or you can use up some of their savings, which is what they're
Right.
doing. But anyway, what you're seeing is this sort of, it could take decades to play out, but you are kind of seeing the beginnings of a mass exodus. And by the time it gets down to the individual level, where you're getting UBI and all these wonderful things, it's kind of too late, because
Wow.
these type of systems, they tend to leak, they start leaking from the top, where the looting really starts, and then it works its way down to the bottom. And I think we're sort of we could be on the precipice of something like this.
Yeah, you absolutely nailed it, and we're on the same page. Even me personally, I believe that we're onto something that's going to be major, whether it's a bank collapse, a regional bank, or something, even the commercial market. But Andrew, it's such a huge pleasure having you come down to Wall Street Silver, and as always, tongue twister. Where can everyone reach you at? Your website, your social media. Where can they contact you? Because that was fantastic information.
No, I appreciate it, and I love being here. So yeah, best way to find me is on LinkedIn. Just look up Andrew Axelrod. I post on LinkedIn. Well, matter of fact, my account got closed for a few weeks there, so I couldn't post. But I'm back on now.
Nice.
So look me up. Hit the notifications bell. You'll get alerted when I post.
Hmm.
And I'm also looking to potentially set up a Substack, just because it kind of made me realize that, I was super dependent on LinkedIn, and I don't have access to my audience, essentially. So
Right.
if I get shut down, there's like no way that I can even communicate
Absolutely.
with my followers. So yeah, look out for a Substack as well. That's coming soon.
Awesome. Well, I want to appreciate you so much for coming down to Wall Street Silver, and then hopefully we can talk to you soon, Andrew.
Thank you so much. Take care, even. Bye
Awesome.
bye.
Take care.